Hello and welcome to 3.2 TV. I am your host Vishakha Thakur. Today we are discussing the spot in Bitcoin price. The kind of a surge we witnessed over the last couple of days is amazing. We will try to analyze the reasons. To begin with, the latest spike in Bitcoin price seems to reflect a substantial change in Bitcoin's investment narrative, less of risk on, risk off, that is correlated by macro events, but a return to a global safe haven asset with better supply or demand fundamentals. The up move of more than 11% was triggered by the news of Depository Trust and Clearing Corporation posting BlackRock's Bitcoin ETF ticker and CUSIP, indicating further progression of their ETF application, although these are standard steps. That was enough to circulate optimism among investors of regulatory approval on the horizon for spot Bitcoin exchange-traded fund. That should unlock fund flow running into $1 billion as institutional investors may allocate funds for this asset class. ETF approval talks raised head at a time when geopolitical uncertainty has heightened the risk parameters against the traditional assets such as equities, commodities, etc. The attacks by Hamas and subsequent responses by Israel led to further global instability alongside Russia or Ukraine and other hotspots. The Middle East conflict has always been the playbook for energy markets. The analysis of 3/4 centuries of price action in the months surrounding 14 regional conflicts helps establish the correlation. Rising energy costs weighs negatively on risky asset valuation. Now, another important factor to play out negatively against risky asset is interest rate. US interest rates are at peak level and there's one forcing function for higher rates. The US is issuing more debt and it needs to find buyers. Higher rates is simply a response to the supply and demand balance for this equation. As such, we are experiencing yields soaring new highs. The yield on 10-year US Treasury bonds topping 5% and the corresponding bond market sell-off. US dilemma is the government need to raise more debts and to find buyers they should offer better rates, which in turn makes debt repayment harder. Now this means bonds will have to underperform the way it did since August 2020 and are likely to underperform in the near future. Meanwhile, hundreds of millions of dollars of short futures and derivative positions in the crypto market being liquidated while being exacerbated by low exchange liquidity. With the Bitcoin halving 6 months away, the new narrative seems to be setting the table for a more positive outlook. And importantly, along this timeline, institutions will likely be buying the rumor before selling the news. The end game, at some point in time, the Federal Reserve will be required to step in to monetize the debt. As of September 2023, US trade deficit stands at $2 trillion, which necessitates funding the gap through bond issuance. That results in an elevated risk of debasement for the US dollar. To be protected against this risk, investing in alternative assets such as Bitcoin is a good option. Well, that's all in this segment. Keep watching 3.2 TV for more such updates and log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off.